Okay, hello again. Time to start. This is our public session. Welcome to our public observers. And the topic for the rest of the session today is the benchmarking project. I want to welcome Peter Rostler, the newest member of the working group, of the benchmarking working group since last June. And I want to ask Laura to take the floor for the presentation.
Thank you, Stavros, and thanks, Diana, also, who I understand will be controlling these slides for us today. If we can launch those when you're ready. Perfect. Thanks. So good day, everyone. We're happy to be here to provide an update to the benchmarking Phase 1 initiative. So our working group, as you know, includes myself, Richard Fleck, Rich Huskin, Pete Osler, as Stavros just introduced as well, and Kristen Weidel. Sylvia Shramko is our key staff person, and Deanne Jules is providing oversight to the project. So I've also asked Richard to join me in presenting our update today, and on behalf of the working group, I want to acknowledge Richard's efforts. He's been heavily involved with Sylvia in drafting the language for the detailed work, so thanks for that. If I can have the next slide, thank you. So for our agenda this session, I'll do a quick recap of the decisions made thus far, and I'll bring you up to speed with respect to our progress in determining what our final deliverables will be expected to look like. And then Richard and I will go through the highlights of the comparison work that's been done to date. I'll cover off the opening pieces, and then Richard will talk specifically about our work and observations with respect to non-assurance services. As you know, Richard is the NAS Task Force Chair, so his insights in this area have been particularly instrumental in our work. And then at the end, I'll quickly outline our planned next steps. Next slide, please. So just as a reminder, or for anyone just getting up to speed, the first phase of the benchmarking work is comparing the international standards in the code that are applicable to PIs with the independence requirements of the U.S. Securities and Exchange Commission and the Public Company Accounting Oversight Board, PCAOB. So we're focused on Part 4A of the code, but of course we'll bring in Parts 1 and 3 as needed based on the code's building blocks approach. And with respect to the U.S. independence requirements, I want to emphasize that we're using an incremental approach, meaning that we're focusing our comparison work on the SEC requirements as the base, and only referring to the PCAOB requirements where they are more restrictive than the SEC rules. So to do that, we've needed to determine where, in fact, the PCAOB rules go beyond the SEC rules. And we're doing that with respect to the specific elements that are being compared as part of the benchmarking. But that's not to say that we'll identify every instance where the PCAOB and SEC rules differ. Our work is very much focused on the areas that we've highlighted for comparison. So we don't want readers to infer that our document can also be used to broadly compare the SEC and the PCAOB requirements. So just a caveat there. And in response to a couple of comments and questions that we've received in the past, we're using a variety of published materials to support our interpretations, including, for example, the SEC or PCAOB staff prepared documents, where those are relevant to our work. Again, we're not doing a full review of all of the staff materials that are published by either organization, but we're definitely turning to them for guidance for their, in their staff materials where it's beneficial for us to do so. And the next slide, please. Thank you. So in the last board meeting, we presented you with the list of focus areas that we've developed, and these represent the areas that we believe to be of greatest interest to stakeholders. Many of these topics are ones that have historically been high stakes, so to speak. And we'll continue to refine that list based on targeted discussions with stakeholders that we'll do in Q4. The board weighed in on this list during the June meeting, you'll recall, but if you do have any other thoughts in this regard, then please do send them along. And the next slide, please. So as a refresher, here's the list of topic areas that we're planning to include in the comparison overall. And you'll note that based on feedback received at the last board meeting, we've now included gifts and hospitality as a focus area. In agenda item 4A, we've provided you with the current draft of the comparison work that's been done to date, And that covers off the top 3 areas shown on the slide here, those being the overarching principles, the key definitions, and of course the permissibility of NAS to audit clients. And we've also included a general reference to the no-CLAR provisions as part of the discussion of the overarching principles. And within that context, we'll also be able to address the suggestion that we received last meeting to try to be as responsive to the importance being placed globally on combating corruption and the recognition that the Code's provisions in this area are definitely part of the global efforts in that regard. So these focus areas were chosen as the starting point for reasons that are likely quite obvious. The overarching principles and the key definitions set the overall context for the work, and they apply then to all of the more specific topic areas that follow along. And NAS was chosen as the first set of specific requirements to compare because of its importance to stakeholders overall. So these first 3 sections form the greatest bulk of the work, I would say. The other sections are in the process of being drafted, and they will be available to you in due course. The next slide, please. So one of the key points that we've talked about before, but it's become even more evident the further into the work that we go, is that as much as both the Code and the SEC and PCAOB requirements are broadly similar in objectives, there are some important differences in context and in approach, and they make it impossible, quite frankly, to directly compare both sets of requirements on an apples-to-apples basis. The first is the scope. So the Code, as you know, applies to all PAs and to services that are provided to any client, whether it's a PI or not. The SEC rules, on the other hand, apply only to auditors of issuers and certain other entities. And although our focus is only on the independence requirements for PIs that are in the Code and, of course, the relevant building blocks, it does make it a bit more challenging to evaluate and present one-to-one discussions. More importantly, though, from the perspective of our analysis work, there's also the fundamental difference that the Code is written for a global audience. But IESBA doesn't have direct jurisdiction, and so it relies on national laws and regulations for implementation. And of course, by contrast, the SEC and the PCAOB requirements are developed for specific application in the U.S. context, where those organizations do have jurisdiction. And next slide, please. Okay, and then finally, with respect to recap, a few additional points that we want to reiterate just to sort of set expectations appropriately. The first is that our comparison work does not try to figure out who the winner is, so to speak. There are merits to both approaches in different contexts. And secondly, our work focuses on the issues that are important to readers, and we're not singling out nitty-gritty details that have no particular practical implications. So in other words, we're aiming to limit our discussion as to the substantive issues and focus on whether the Code's provisions and the SEC rules address the same issues and achieve the same substantive outcomes. So we're reporting back on the similarities and the differences at that level, again, noting that a direct one-to-one is often not possible given those different contexts and approaches of the 2 different sets of requirements. And lastly, just a quick reminder that the final outputs will be staff documents based on the various input that is being received. And if we can move on. Excellent. So next I want to talk a bit about the proposed output from the initiative. And although our methodology for the project has shifted a bit over the course of our work, we're still very much aware that the information that we produce needs to hit different levels of granularity for different audiences or different purposes. So we've been spending time on the detailed analysis. That's sort of the place that we need to start, obviously, to get that right. And the output of that work is what's been circulated to you as Paper 4A. We've been trying to strike the right level of detail here without making it overwhelming for readers. The information is generally laid out based on the Code's structure, discussing the Code and then the corresponding SEC requirements, and as well, of course, the PCAOB requirements in cases where those PCAOB requirements do go beyond what the SEC specifies. And we're hoping that this ordering will make it easier to follow and to find your way around and navigate through the document. Within this analysis, we've tried to include sufficient explanation of any interpretations that we've made and the rationale for our comments and our observations and so on. And then we've summarized what we believe to be the key differences and similarities in commentary paragraphs that sort of wrap up each of the sections of the discussion. And the next slide. Perfect. So that's the detailed analysis, but we recognize that not all readers are going to be interested in that level of granularity. Some stakeholders will instead, or perhaps in addition, be looking for a high-level overview that summarizes our observations and conclusions. And this is also likely to be the output that will be most useful for the board in terms of future considerations, given that the board is going to be most interested in those big picture lessons learned from the exercise rather than those finer, comparative points between the two regimes. So obviously the summary that we produce will need to be consistent with and fully supported by the detailed work, but it's also going to need to be able to stand alone as a separate deliverable for those who are really only interested in those higher level outcomes. So the two levels then are both essential for their purposes, and having both will provide some flexibility as to how each should be positioned, presented, and promoted based on stakeholder needs. And the specifics around these decisions will be made once the deliverables themselves have been fully drafted. And on the next slide, please. Okay, so I want to pause here and collect your feedback on the level of granularity that's been reflected in the current draft in Agenda Item 4A with respect to the detailed analysis. And we did receive a few suggestions in advance from Sadia with respect to the structure of the deliverables and the usability of outputs and so on. So thanks for those, Sadia, we'll certainly obviously take those on board. I'll also take any thoughts on the overall approach to presenting the outputs in those two levels, sort of a detailed analysis as well as a summary of the conclusions and commentary at this point.
Thank you. Thank you, Laura. I see Lisbeth as a first commenter.
Thank you, Stavros. So my reaction when I was working my way through the document is that it probably will become a very, very long document. We already have 35 pages only dealing with basically 3 out of the 9 topics. So if I do my math correctly, that will mean we will end up with a document that will be expected around more than 100 pages. So that raises then the question, well, who is actually going to be the target audience of this document apart from the IESBA, and who is expected to be looking at that document? And I'm not criticizing the project in itself. I'm just thinking about what should be the output from the perspective of the users. And so do we think that this audience group is going to be reading or be interested in all of these topics, or potentially only certain items? So I started wondering whether it wouldn't make sense to split the document in different subjects. And a way to do that is, on one hand, focusing on the overarching framework that is in the code and somehow in the general standard on independence for the SEC as well, and then focus more on topics that relate to personal independence matters, so individuals having to comply with certain independence rules, and then the other perspective could be the firm's independence, so scope of services, business relationship, but that also could potentially include certain matters that hit on personal independence. And if you do that, I think you will have shorter documents, and it will actually help your reader to focus more on the topics that they are truly interested in. So that was my thought on the output.
Thank you. Thank you, Lisbeth. Any other remarks, please? Jens.
Thank you, Stavros. Thank you, Laura. I have a more general remark for the introduction of the paper, where you are saying something about the objective. But I think it's very important it's similar to what Lisbeth said, that we have different people or audiences here. If you're looking at the practitioner, he would be overwhelmed by the information, and that's why I think perhaps you could a little bit elaborate that there are different potential audiences we are addressing. The one is national standard setters in their process of seeing the global development and see trends. The firms who are looking at their independence concepts, and perhaps also academics and others. And by clarifying this, and perhaps also saying the board itself, to see where there are potential deficiencies or differences which we have to look at. I think in elaborating a little bit the objective with some more words, it would be clearer for the audience to concentrate on those topics who are of interest. Thank you.
Thank you. Sungnam.
Okay, yeah, I found the current draft is very informative. This draft reflects all revised provisions already pronounced as of now, including those not yet effective. When the report is finalized and published, probably sometime in early next year, there will be, I believe, two different sets of provisions. First is those already revised and effective. Second, those already revised but not yet effective, such as NAS fees, PIEs, and ET and technology we are currently reviewing. With this in mind, in drafting the report, we need to take into account the first thing will be whether we'll reflect in the report all of the revised provisions to be pronounced probably early next year. Second, how we'll touch on the extant provisions that will continue to be effective by the end of the transition period for the benefit of readers. That's my comment. Thank you.
Thank you, Sungnam. Let me collect one more before Laura and/or Richard respond. Winnie.
Thank you, Laura, and thank you, Chairman. Mine is just a small comment, perhaps in light of the discussion that we had earlier. When I read the report, my key takeaway was that actually we are not fundamentally at different levels or at different paths with the jurisdictions that you're currently looking at. And I think that gives us some degree of comfort. I think it might be difficult going forward to produce the report in a manner that is very useful to other stakeholders, thinking of people like academics or those who want to compare the standards, because we really can't attribute to the other people. And I think ultimately this report will be to help us to assess the robustness of our own standards. I see the primary value of this report as an internal document, and I'm not necessarily saying don't publish it, but maybe the way you arrive at conclusions might be somewhat different, sort of something that says, okay, on this particular issue, perhaps our approach to NAS, we've not taken a fundamentally different approach, or there are no significant inconsistencies, as opposed to something that conclusively says this jurisdiction has a higher requirement or a narrow approach to what we do. But I see the document more as one that will enable us to assess vastness of our own standards and perhaps guide our own standard setting. Thank you very much.
Laura, shall I pause here and have you make a comment, or you want me to go on?
Please, actually, if we can pause here, that would probably be a good idea, and I'll address the ones that have come in.
Yeah.
Thanks all of you for your feedback. Definitely some ideas for us to make sure that we take on board. Not dissimilar to some of the discussions that we've had. We're aware certainly that we need to be clear on how different audiences will use the material, how different stakeholders will want to interact with it. and make sure that the presentation, the way that it's being, put out there, and the tools, I'll say, that are within the document allow for efficient use. So, for example, making sure that we do have that summary document for those who are interested at that level, and that we do then also have within the more detailed document that it is easily navigable through, internal hyperlinks and so on, so that if someone is only interested in a particular area, they don't need to try to read through the entire document to find that section. They can look at a table of contents, for lack of a better way of putting it, that shows them where to look for those key pieces. Also making sure that the commentary paragraphs are clear enough that people can look at those to get a sense of, do they need to read more deeply into the document, or is that the level that they're looking for? So your thoughts around that will definitely, Lisbeth, in terms of, do we want to perhaps split it out into different documents? That's an approach that we can take that back and consider that. Obviously, anytime you start splitting a document apart, then you have to start worrying about what kind of introductory piece does it play over different documents then, and do we need to be concerned about versioning control and so on? Is that something that perhaps internal linkages within the document might be able to take care of in a more efficient way? But definitely something that we can take back and think about that for sure. Jens, I think similar comments in terms of, again, making sure that we recognize how it might be used by different audiences and that we ensure that the document is usable in a form that makes sense. Clarifying the objectives in terms of helping people understand how it can be used once we get to that point. Again, definitely we'll take that back with us as well. Sungnam, yeah, in terms of the sort of where we're at with respect to standards and which standards it's being based on in terms of, in a period of time as to which ones are effective and which ones are incoming. Agreed, we will need to make sure that that's clear. It's currently reflected in the footnotes of the document, but perhaps that's something that, again, based on when the document gets published, we'll need to make sure that we're being very explicit in terms of the standards that are being compared in there and the fact that they are, in fact, the ones that are incoming, the updated NAS and fees documents, for example. So good reminder there. Thank you for that. And Winnie, in terms of the primary use for the board, certainly that summary level is where we were anticipating that's kind of the level that the board will primarily be looking for rather than some of the detail, but making sure that obviously the detail is available for support where that makes sense too. Being careful in terms of how we express conclusions, and I think being consistent in terms of how we present those commentary paragraphs might go a long way in terms of meeting some of the concerns that you're raising when different audiences are trying to use the document. So hopefully that helps. But again, thank you all for your comments. We've got them noted and we will take those back to our discussions as well.
Thank you, Laura. I also see a hand raised by Yaoshu.
Thank you, Laura. I think this text is very useful, and I have a suggestion. When the working group expressed the conclusion, I think we should pay much attention to the wording of, for example, that's the SEC, some the provisions is stricter than the code. Such kind of words, I think we should keep cautious on this such kind of wording. And also for the scope, and it means that the code is only or including a blah blah, and but that's the scope of the SEC is broader than the code. Such kind of wording, I think we should pay much attention to the wording. Thank you.
Thank you, Yaoshu. Ian, please.
Thanks, Stavros, and thanks, Laura. Really informative work, so thanks to everyone involved in that. And my apologies if this has been asked before, but for me, the question is, are you collecting as you go perspectives on opportunities the board itself might have a look at from other standard setters that we can benefit from in our own work by revising our own code over time, or at least considering that as part of our work program? Is that part of what you're seeking to do here? Because I'm beginning to leverage the work. I mean, there's a big investment in the work here and it's informative, but if we can use it to improve our own code as well, that's great. And it's a question of, are you collecting anything like that along the way? Thank you.
Thank you very much, Ian. I do not see any other. Geoff, do you see another?
There are no other raised hands at this stage, Mr. Chairman.
Let me make a brief comment, please. First of all, I share very much what Ian just said, that one of the purposes of this exercise is for the board itself to learn what possible gaps there are or what possible alternative ways there are to do standard setting in particular areas. So that's one part of the audience, and I think that for that, especially since we're moving into a phase with the new work on the new SWP, it might be very useful. Number two, I just want to share my experience from traveling around when we did travel around, which is some time now, that in many places where I went, especially smaller jurisdictions and several times in emerging contexts, people were asking the question when hearing about the code, how it compares with the US standards or with the European standards. In other words, with the standards of the advanced jurisdiction. People do understand that there's a difference between a global code and a jurisdictional code, but they do have this worry when talking about adoption that they do something that is comparative in terms of comprehensiveness, robustness, coverage, and so forth. So I think that that type of audience should be on our mind. And again, for that type of audience, I think two items are very important. First of all, a solid summary of conclusions document, and secondly, a clear explanation of the methodology that we have followed in order to compile this work. I also think, finally, that it might be a good idea that some of the very detailed comparison material goes into appendices rather than make up a huge report, as I think Lisbeth suggested. So these are my comments. And I see, in addition, a raised hand from Hero.
Thank you, Stavros. I have a quick question. Is the working group planning to prepare an executive summary? In my view, given the length of the full report, an executive summary is useful for readers to understand findings or conclusions more easily.
Can I collect one more, Laura, before you respond?
Please.
I see Caroline's raised.
Thanks, Stavros. Thanks, Laura, for the presentation. My understanding is the 4A is the detailed analysis, and so there ought to be then a separate, shorter summary, which is what I guess everyone's saying. I also agree with Yao Shu about the that care needs to be taken in the text, making sure that we actually don't introduce our bias in saying that the code is stricter or the other national standard requirements are stricter. So there were certain instances in the paper that I felt the way that it was expressed wasn't necessarily the best way of putting the points forward, and I can share that with yourself and Sylvia, with the working group and Sylvia. But my understanding is this 4A sets out that granularity, and that's why you've got the the comparison and the commentary. So I just wanted to check if my understanding was right. Thanks.
Laura, you have collected enough comments to
Thank
to
you.
want to respond to some of these now, please.
Yes, thank you. So Yaoshu and Caroline, both in terms of making sure that we are careful about the wording. Absolutely, we recognize that we need to be very careful about all of the wording. If Caroline, if you do have specifics where you think that perhaps the wording is not as as it should be or as it could be, then please do let us know offline. That would be wonderful, most appreciated. We obviously we're intending to be as objective as we possibly can, giving fair consideration to both, but also making sure that we're trying to be as accurate and factual as we can be as well, and that we're not again getting ourselves into a situation where we're going beyond on an interpretation front, or getting into space where we might be seen as sort of writing code, that kind of thing, or writing rules outside the code, so to speak. So yes, absolutely, we do understand the need, and if anyone has any specific wording comments, then please do send those in to us. Hiro, in terms of an executive summary, it's going to depend a bit on the length. In my mind, and that might be just the way that I consider it, executive summaries tend to be quite short. And the summary that we're contemplating is, by necessity, probably going to be a little bit longer than what would typically be categorized as an executive summary. But from the perspective of, will there be a fairly easy and much more succinct summary? Yes, there will be. That is absolutely the intent of that second level of information, that we can't write until we've finished with the detailed work. You always write the executive summary last, right? But yes, we will certainly be looking to have that level of summary information. One other thing that I'll comment on, and Stavros, thank you. I think you addressed Ian's thoughts along the way as well, so thank you for that. In terms of the length of this document, I don't think that it's fair to say that it's going to be linear, that we can just extrapolate from the number of sections that we've covered now and how many pages does that mean. But yes, it will be a fairly lengthy document by any standard. So it's probably not going to be quite as long as the extrapolation would result. But again, that doesn't mean that it's going to land in at 40 pages when, as you said, it's already at 35. So just something to keep in mind, that we need to weigh out the summary to make sure that it is a standalone document that provides the level of detail needed for those higher level stakeholders, including the board, as has been mentioned. I note also, Richard, you have unmuted. Do you have something to add to this? I want to make sure that you have a chance to speak too.
Thank you, Laura. I think I've really got 2 points, and they're slightly linked. I hope everybody can hear me. Stavros, you and Ian both talk about opportunities for further future revisions and so forth. I'm not sure it's the working group's role to produce a public document that talks about future revisions. That seems to me to be perhaps a step too far. But I certainly think that it is possible for, and is a local extrapolation of what I envisage would be in the summary document, to identify the things that the board might consider as being areas for further review or projects, as the case may be. Because I think that obviously it's for others to decide what should be pursued, and I don't think we should be producing a public document that talks about the things that, or seems to express a view as to what should be on IESBA's future work program. The second point I just wanted to draw out is this. I absolutely take on board the concerns and the suggestions to be sensitive when commenting on differences between the code and the SEC. But if we are to also objectively comment, as was suggested, on the how does the code compare with the SEC, we can't ignore the fact that there are some differences. I mean, it's inherent in producing a commentary of the high level that you talked about, Stavros, that talked for other jurisdictions who have particular interests and so forth, that we have to have some comparative comments. Now, that doesn't mean that they have to be, quotes, critical or judgmental in their tone, but it does mean that you can't ignore the existence of those differences. Otherwise, we're not achieving the objective that was set out at the outset. Otherwise, if I may say so, I take on board and all the comments to be made and endorse Laura's responses to them. Thank you.
Thank you. Thank you, Richard. And I certainly did not mean that there should be a public document telling IESBA what to include in its next SWP, simply an input to the board, a side product, an input to the board in its future deliberations.
And I took it that way as well, Stavros. I just thought I should be alert about the point.
Thank you for clarifying. Thank you for clarifying, Richard. Ken.
Yes, thank you, Mr. Chairman. I wanted to just come in and second what Richard just said. And we have to be careful that we don't swing the pendulum too far to the other end and end up with a document that is bland and doesn't achieve any particular aim. I think we know that one group that is going to be finding this document, the output of this initiative, to be very useful is the group of national senators. We know, for example, that the Canadian national senator as well as the Australian national senator have been looking to have a similar analysis done so they can consider what actions they might want to take with regard to adoption of the code. We've been in discussions with IESBA in Australia, for example, with regard to how the revised NAS provisions compare with the SEC rules. They've been wanting to see what sort of comparison we would have done on this, and they've been awaiting the conclusion of this initiative. So again, it's a question of balance. I think we have to be sensitive, yes, that we don't come across as in any way disparaging different national senators' standards or provisions, but we have to try to be as objective as we can. Also, again, recognizing that an important objective of this initiative is really to help those national bodies that are considering adopting the code and are wanting to understand how the code stands relative to the standards of some of the major jurisdictions out there.
Thank you. Thank you, Ken, for your point. I do not see any other raised hand. Jeff, am I right?
Correct, yes.
Okay, so back to you, Laura.
Thank you. So thanks again for the input there, and also to Richard and Ken for those clarifying remarks as well. Thanks for that. If we can move on then to the next slide. Perfect. Thank you. So I'll move next to give you an overview of the high-level outcomes of the analysis to date with respect to the three areas that have been presented in Agenda Item 4A. And as I mentioned, I'll talk about the first two, and then I'll hand off to Richard to go through the NAS piece. And let me just stress here that our observations and conclusions at this stage, they are still preliminary. They're very much subject to change as we continue to work our way through, and obviously as we collect additional feedback and insight. Before we finalize a draft of the report for the December meeting, we do plan to circulate a complete updated draft by email and ask you for your thoughts at that point. So with that in mind, we're not looking to do a detailed discussion today on the specifics of the wording that we've chosen or the interpretations or conclusions, given that they are still draft. But as I said, if you do have comments on the specifics, we are actively seeking those offline at any time by way of email to Sylvia. If we can move ahead, please. So in the first section of the analysis paper, paper 4A, we've looked at the code's approach using the fundamental principles and the conceptual framework, and then we've similarly laid out the approach that's taken under the SEC and the PCAOB frameworks. And we've noted that the code and the US requirements are both hybrid types of systems. They have specific rules and requirements that support those higher level principles that are found in each of the frameworks. So both sets have a similar overarching set of objectives or principles that aim to achieve, obviously, appropriate auditor independence. But there are some differences in how independence is assessed and how the objectives and principles are applied, often related to some of those differences in context and approach. And if we can move ahead, please. So when we look at how the big picture principles or objectives compare, we do see strong alignment in many cases, even though there's not a one-to-one mirroring, so to speak. But for example, both sets of standards look at self-interest and conflicts of interest as having obvious negative implications for auditor independence. And similarly, both very clearly deal with the concept of not auditing one's own work. Both are interested in ensuring that auditors don't assume management responsibilities and that auditors don't end up in positions where advocacy on the client's behalf impairs objectivity and independence. But the last two concepts on the right-hand side here, that management responsibility and advocacy, these are ones where we've identified different approaches that are being taken within the code versus the SEC context. I'll talk about the management responsibility piece, and I'll clarify that in just a minute. And I'll let Richard speak to our observations on advocacy as part of his discussion on NAS. And if we can move ahead. Thank you. So as we've said in previous meetings, we do see a great deal of similarity in terms of overall objectives and principles, but there is a key difference in the frameworks in terms of their processes, the processes that are prescribed for determining whether a relationship or a service is in fact prohibited. The code, on the one hand, focuses on the possibility, so to speak, that a service or relationship might give rise to a threat, and then on whether that potential threat is at or can be reduced to an acceptable level. And on that basis, the service or the relationship is prohibited if the threats can't be reduced to an acceptable level by way of safeguards. And then further in the PI context, which of course is the context for our project, prohibitions also result under the NAS provisions if the service or the relationship might result in a self-review threat. By contrast, the SEC rules simply prohibit services or relationships that would lead to a breach of their overarching principles. So as a result, under the SEC framework, a firm's assessment will focus on whether the service or whether the relationship would threaten compliance with any of those overarching principles, rather than being based on the level of threat of a breach of those principles. And because safeguards aren't permitted under the SEC rules, the outcomes then are more clear-cut. If we can move ahead now, please. Thanks. So these different approaches, they each have their strengths, right? They each have merit, and they can each be seen to be more or less stringent than the other, depending on the perspective you take. And again, this comes back to the sensitivity around the wording sometimes and the careful approach that we do need to take in order to provide useful information as we go through. But overall, looking at the approaches overall, on one view, the code could be seen as stricter because it focuses on potential threats rather than on absolute breaches, and then requires firms to put safeguards in place. But if we look at it from another perspective, the SEC rules could be viewed as stricter because they don't permit safeguards. So safeguards can't be used to address situations where a service or a relationship would otherwise breach those overarching principles. So what all of this means is that, again, an all-encompassing comparative evaluation is really not possible because so much depends on the specific circumstances. So we're not going to, again, we're not going to come away with an overall position as to whether one framework is better than the other. That's not part of our goal here. And moving on. Okay, so next I want to talk about an area that has occupied a good deal of our working group discussions, and that's the different approaches taken by the code and the SEC rules with respect to management responsibility. So we're all clear on the way that the code deals with this. The code prohibits firms assuming a management responsibility for an audit client, and the prohibition applies to all aspects of the relationship between the firm and the client. Under the SEC rules, there's similarities and differences in the way that this is addressed. So the SEC rules include a general prohibition against acting as management, but they actually go further and also prohibit acting as an employee of the audit client. And specifically, the SEC's rules on management functions prohibit an auditor from acting temporarily or permanently as a director, officer, or employee of an audit client, or performing any decision-making, supervisory, or ongoing monitoring function of the audit client or for the audit client. In contrast, of course, in the code, Section 525 does allow for personnel to be loaned to an audit client for a short period of time if certain conditions are met. So we see a difference there, and we've explained this in the detailed work. Okay, so that's the overview of our analysis of the overarching approaches of the code and the SEC rules, and again, these are contained in Agenda Item 4A for you. I'll just mention that there are two components within this part of the detailed work that we still need to complete. Those are with respect to NOCLAR and the section on mutual or conflicting interests with the audit client. So those are still placeholders in the document for us. Okay, if we could move ahead, please. Thank you. So I'll move on next to talk about the definitions. And with respect to definitions, it's obviously important for us to understand how the terms are being used in the different standards in order for us to understand the respective provisions. But we also need to keep in mind that it's not really that important whether the two sets of standards define things the same way. What matters is how the provisions themselves are written with reference to those definitions. So, in other words, it wouldn't be valid to make conclusions on how the requirements or rules compare just by comparing definitions. We need the full context of the provisions to be able to make those comparisons. So what our analysis of the definitions looks to do is explain how the terms are used in each set of requirements and primarily look at the scope they set to provide background for our discussions of the provisions that then call on those definitions. And there are 4 definitions that we found to be worthy of discussion, so to speak, as shown here. The first 2 are the most important in some ways to our analysis, but I will walk through all 4 of them briefly. Next slide, please. So first off, with respect to the audit client definition, both the code and the SEC rules include either related entities or affiliates in the definition of the audit client. Related entities in the code, affiliates in the SEC rules. So then we need to compare the definitions of related entities in the code with the definition of affiliates under the SEC rules to see whether the scopes of the 2 sets of requirements are the same or not. And there are a few differences in scope with respect to who is an audit client. The first is that the code excludes entities that control an audit client if the audit client is immaterial to that controlling entity. The SEC rules in contrast would actually include the controlling entity even if the client isn't material to them. Excuse me for just a second. Thank you. The SEC rules are also slightly broader with respect to including entities that have significant influence over the audit client regardless of the source of that influence, whereas the code focuses on direct financial influence. And lastly, the SEC rules specifically scope in each member of an investment company complex when the entity that's under audit is an investment company or an investment advisor or sponsor. The code, on the other hand, because of the global nature, it doesn't actually address investment company complexes at all, given its breadth. So the SEC definition has a broader scope, but again, what matters at the end of the day is how the defined terms end up being used in the provisions themselves. Okay, and if we can move on. Thank you. So next we have the definition of firm, and here the code specifically also defines network firms and then specifies the provisions applying to network firms. The SEC definition, on the other hand, of accounting firm doesn't specifically include network firms, but it does include the firm's associated entities. And the term associated entities is not actually defined itself, but if we back up a step, remember that the SEC has regard to all of the relevant facts and circumstances when it interprets its rules. So this means that we can't get a clear comparison of exactly how those definitions line up in black and white, but on the whole, what does come through pretty clearly is that both frameworks appear to have the same objective here, namely to address the position of those firms which are required to be independent of the audit client. And if we can move on. Thank you. So next, with respect to the definition of audit team. So the code's provisions focus primarily on the audit team, and then they might add in different individuals depending on the service or the relationship that's being considered. And in this regard, the SEC rules tend to be broader in their approach. They apply to covered persons, which includes the audit engagement team, but it also includes individuals who are not addressed in the code's audit team definition. So again, this requires careful consideration of the wording of the provisions to see who is scoped in by way of definition and who might be specified additionally in the provisions themselves. But in general, with respect to this, we're not aware of instances where the difference here in the definitions is, the way that that's used. We're not aware of instances where those are leading to any substantive differences in application. And if we can move on. And finally, with respect to definitions, key audit partner in the code, or just audit partner in the SEC rules. So here, the differences arise from the fact that the SEC definition includes some other partners who are involved with the client, in addition to those who would be captured by the code's definition of key audit partner. But as with the audit team definition, although of course we need to be careful in terms of interpreting the provisions and the rules based on the scoping that's inside those definitions, we're not aware of instances where this definition or these definitions have led to any substantive differences in application. Okay, and if we can move on, please. I will pause here briefly again and collect any thoughts or questions on the materials so far before we move on to the NAS materials.
Thank you very much, Laura. This was quite good. Thank you. Let me see if there are comments or questions, please, from members. I see Caroline, please.
Thanks, Davros. Thanks, Laura. So as we went through the slides, it actually highlighted some of the points that I raised earlier. So I think it's on slide 15, where we talk about the code being stricter because it focuses on potential threats. I would not see it as the code being stricter. In fact, in practice, the general understanding is the SEC code is, the SEC rules are stricter because whilst it applies the general standards, it then goes on to add specific rules. So I would see the code as being more broad-based in that it's got the fundamental principles, it's got the conceptual framework. So I wouldn't say that it's stricter because it focuses on potential threats. Also on slide 16, where we talk about management responsibility and acting as management and acting as employee, I think with the changes that we made through role and mindset, where we talk about compliance with the spirit of the code and not just the letter, would actually cover. So I don't really see that there would be a difference. And then on slide 18, where you talk about the definition of affiliates and that being wider, especially for an investment company complex. If we think about it, we have R400.20, which in the definition of related entities requires the PA to think about any other entities that that might have an impact. So just some comments. Thank you.
Lisbeth, please. Thank you, Caroline.
Thank you, Stavros. Yeah, I do have a number of comments throughout the sections that you shared with us, Laura, so far. I'm not going to go into each of these in details. I will send in at some point all of them to you by email. Nevertheless, there are 2 points that I find rather fundamental, and that's why I want to put them on the table here. In the section on management responsibility compared to management function, I think we're missing the point completely. The SEC rules describe what constitutes to be a management function, and it's very obvious in those rules that all of these activities you cannot perform. Whereas in the code, the big difference is that assuming a management responsibility is about the fact that you're taking responsibility for the actions that are usually being executed by or that are to be executed by management. And that is a very big distinction. And I don't think that comes out of the wording currently in this document. Just by referring to a couple of paragraphs. So if you read through the examples, for instance, it's clearly showing that it is about the auditor taking responsibility for these activities. And that's also why the code then has these requirements that you need to designate a competent employee who will follow all of the activities as part, for instance, of a non-insurance service, and then takes responsibility for all decisions that normally have to be taken by the management. So that point is totally missing in this document, so I urge you to revise that. Secondly, on the key definitions, the affiliate definition compared to the related entity definition, I agree with what you have. However, under the new rules that recently were published by the SEC, there is this new concept of entity under audit, and that is missing in this analysis as well. And I think it's key because the SEC looks at the application of the rules from 2 different perspectives. On one hand, audit client and affiliates, but other rules are only with respect to the entity under audit. So I'm urging you to add that into the document as well, because that's a significant difference compared to the code. And then again, I have a number of others, but I'll submit them in writing.
Thank you, Lisbeth, for your diligence. I also see a hand raised. Vanya.
Thank you, Sir. Thank you, Laura. I found it fascinating because we are involved with the standards and the code. And when you do this kind of exercise, we realize that we are not exactly assertive about the definition of some very important words. So I think it is very good for us to have this kind of exercise. It doesn't mean that we got the concept right, but we start having a clearer view what exactly each standard setter is requiring or not. So I think it's a very good opportunity for us all to understand, to learn from them, and then be able to use the different definitions in a sense that might reduce inconsistencies among regulation.
Thank you, Vanya. I'm wondering if there is another raised hand. I don't see any.
There are no other raised hands.
Okay, so back to you, Laura.
Perfect, thank you. Yes, I'll go sort of from Vanya and work backwards there, as that's how my notes are currently presented here to me. Yeah, in terms of making sure that we, learn from whatever opportunities there might be to, to think about how we, or how the board defines terms and so on. Certainly if there's opportunities that arise from that perspective, we will take note of them. I think everyone can agree that more consistency is a better thing, but that doesn't mean that, just because another definition is being used or someone else is defining something differently, that may work very well in one context, but not the other. But absolutely, we also see that it's a good exercise to go through for sure. Lisbeth, in terms of the specific comments that you have, yes, please do send those along. And in terms of the I'll say the high level concern that you raised about the management responsibility, that we might be, missing the mark somewhat in terms of that big picture, what the code is meaning by the discussion on management responsibility. If it's not coming through in the paper, then that's something that we will take back and revisit that piece of the discussion and probably reach out to say, to get some more insight as to why that impression came across to you. At the high level, I think we do very clearly see that the requirement not to assume management responsibility in the code, it is very robust. Where the difference comes in is at that lower level when we're talking about whether one can act as an employee or loan staff or loan personnel across. That's where we see the specific differences rather than that sort of general principle level. So again, if that's not being currently reflected, then we'll want to revisit that, certainly. Caroline, in terms of sort of a big picture, again, the finer points that you have, yes, please do send those along. And the ones that you've raised, we've taken note of. The one comment that I'll make when you're talking about slide 15 and, is the U.S. code not stricter and is the code not stricter? And I wouldn't say the code's stricter. That's the whole point, is that there are different perspectives, and we have heard both perspectives. We could support, arguments on either side. They both have merit. Both approaches distinctly do have merit. And again, that's why we're not, the slide that you're seeing there and the fact that this one is stricter or that one is stricter, that's not going to be showing in our document. It was there simply to illustrate the very conceptual issue of the fact that there are two different ways, at least, to look at it, and we can draw different conclusions about which one is stricter or more robust or whatever, depending on the perspective that you take. So interesting when you're, when you're raising sort of how you perceive it. That's interesting to share with us, absolutely. But again, the whole purpose of that was to look at both perspectives that we have heard. So thank you for those comments. If there's no other comments at this point, then I will turn it over to Richard if we're ready to move on.
Yes, please go ahead. Richard, welcome.
Thank you, Stavros. I'll try and take these quite quickly because I think that much of what's been said before will no doubt, the general comments will apply here as well. Our analysis of the provisions relating to non-insurance services shows that, first off, that both frameworks are trying to achieve the same objective. I don't think that will come as a surprise to anybody. And that objective is to ensure that additional services don't compromise auditor independence. As we've seen, they start from strong overarching principles, and both frameworks then look at a list of specific services. There is one difference that needs to be just drawn out. How significant it is, again, is always a question of judgment, but we cover other assurance services through the fundamental principles and the conceptual framework, whereas the SEC approach is to identify specific services and address them, disregard whether they are, how they're provided, whether they're non-assurance or non-audit services and so forth, from being provided to audit clients. But I suspect that in the end, distinction is relatively small, but that's something we're looking further as we move forward. Can I just, in this context, before leaving it, say this issue of how you view whether one framework is stricter than another also turns on what the particular body is trying to achieve. Some frameworks are what I would describe as enforcement orientated, because that's the policy objective that's been determined by government or by the overarching governance body, and others are trying to promote best standards, which are not necessarily the same. And so the judgment of whether something's stricter or not turns on what the objective of the particular framework is, and that's probably something we need to pick up in as an overarching comment about what the particular framework is trying to achieve or is giving priority to in the way in which it's formulated. Next slide, please. So the interesting thing about this is that both frameworks explicitly prohibit certain services, and both frameworks work on the basis that if something's not prohibited, it may only be provided if the relevant principles or framework requirements are complied with. And the other thing to draw out is that the code requires consideration of laws and regulations, and then requires compliance with the code if the code is stricter than those laws and regulations. That's not a provision that exists in the SEC regime, which is unsurprising given that the SEC does set, for all practical purposes, the relevant laws and regulations. So it doesn't need to have this provision, but it's worth just highlighting the fact that the code does ensure that it's given primacy in case of being stricter than laws and regulations of the applicable jurisdiction. Next slide, please. The position in relation to the different threats or objectives, principles, is that in the case of the self-review threat, the two frameworks take fundamentally the same approach in relation to PI audit clients, in that when there's a possibility that a non-assurance service might create a self-review threat, it's prohibited. And the same principle drives the SEC requirements, namely that it's fundamental that an auditor can't be in a position of auditing his or her own work. So very similar in objective and in approach. There are obviously services that give rise to other threats, and the one that creates the most difference in approach is the way in which advocacy threat is addressed. Now, the code obviously deals with it on a threats and safeguards basis, unless the service is itself expressly prohibited, like giving evidence on behalf of clients. But the SEC approach appears to be more focused on how the service aligns the firm with the interests of the audit client. And so it's more our impression, but this is very much an area which is the subject of continuing discussion on the working group. So I want to really emphasize that we have not definitively concluded our views on this, but certainly the SEC, the application of the SEC rules gives rise to a much broader approach to advocacy than we adopt in the code. So, for example, this is an example I've been using in our discussions on the working group. If a audit firm is asked to draft for its audit client, because it has its own legal services capability, is asked to draft a power of attorney for the audit client, that would be prohibited under the SEC rules. Whereas under the code, I don't think we would regard the drafting of a power of attorney as being giving rise to an advocacy threat. And it's the application of that mindset of what I would describe as alignment with the audit client that gives rise to what may be a meaningful, significant difference between the code and the SEC requirements. And as I want to emphasize very strongly, that is a continuing discussion that the working group has not reached a conclusion on, but which is an area we need to get to the bottom of. We've already talked about management responsibility, and in a moment we'll come to the services that are expressly prohibited by the two frameworks. Next slide, please. So when looking at the relevant provisions and the particular application to particular services, it's the starting point is that obviously in the code that provision of NAS could give rise to and impair auditor independence. The SEC rules do not explicitly exclude affiliates from the scope of the restrictions, but they do have a not subject to audit provision or exemption, which is applicable to 5 specific services. And they're the ones in the top box on the right-hand side. And the significance of the comment I just made about it not excluding affiliates is that as a result, when they have a prohibition, it is presumed to apply to any affiliates of the audit client. But in the case of the 5 specific services in the top box, the exemption of not subject to audit permits or allows a firm to provide those services to an affiliate. And that is set out and developed in an SEC FAQ, which explains that that is an example. A provision of a service to an affiliate who is not subject to audit is an example of where the not subject to audit exemption applies and allows the provision of the service. All other services are either, if they're prohibited for the client, audit client, and for the affiliates. So that's the way in which the SEC deals with the position of affiliates. We, on the other hand, in the code, deal with it on a case-by-case basis as to whether or not an affiliate is caught by a prohibition. Next slide, please. So a very high-level comparison of the code and the SEC framework to see whether they are comparable in the prohibitions that they impose. And broadly speaking, what you will see is that those that are in the lighter shade, there is, for all practical purposes, alignment. And if they are in bold, there's a difference. Now, administrative services are prohibited by the SEC under the concept that if you do any work for which would ordinarily be done by the company, then that is brings you fall foul of the employment type prohibition. The differences in relation to, and I'm not going to go through these specifically because it's too detailed for this discussion, but there are differences in the approach to appraisal and valuation, much of which stems from the alignment comment I was making about advocacy. The position in relation to tax, the SEC position focuses on, has explicit provisions dealing with provision of services to those in financial reporting oversight roles. And the legal provision points also stem from the alignment stroke advocacy discussion. And as you will all be aware, those there are specific provisions in the US dealing with broker-dealer investment advisor services. We will, in the report, cover each of these as appropriate. But the interesting point, and the point I want to draw out from this, is that these points derive from the general approach or by the SEC to, in one case, employment type roles, and in the other to their approach to an understanding of advocacy stroke alignment with the audit client. And that's why it's important to understand, as Laura has mentioned at the outset, it's important to understand the conceptual differences, to focus on the conceptual differences, and then recognize how they are, how the application of them gives rise to differences. And that's because that's what we should take away in, I think the working group's judgment should take away from this exercise, is to understand how the conceptual approaches impact the resultant provisions. Next slide, please. So let me pause there and ask if anybody's got any questions. Stavros, I'll hand it back to you.
Thank you. Thank you very much, Richard, for the presentation. Any comments or questions, please raise your hands. I don't see any for the moment, but Jeff?
No, I don't see any raised hands at this stage.
Let's give half a minute.
Yep.
For people to make up their minds. I see Caroline smiling, which means that she doesn't have a question. Or she does, but is suppressing it. Okay. Richard, I don't see any hands.
I think, Stavros, in a way, I think that the fact is that the prior discussion has really covered the thought process issues that come out of all of this. And I just echo Laura's recognition of those and appreciate that we will keep working at it. I am conscious of length, and it's already shorter than all the work that Sylvia's done so far. I think trying to present it in a way which it is digestible and navigatable is critical. This is obviously the current underlying document, the working paper, and we'll be looking at that as we go along. Back to Laura.
Laura?
Thank you. Thanks, Stavros. Thanks for that, Richard. Very, very useful. So the last thing that we want to touch on just quickly is the plan for next steps that are shown here. Thank you, on the slide. Next week, we'll be reporting back to the CAG for the September session and collect their feedback. And then similarly, we'll hear thoughts from the NSS in October. And we're also still working out plans to touch base over the next couple of months with a few specific stakeholders in order to make sure that we've identified the key topic areas of greatest relevance to them. At the December board meeting, we'll provide a further update on the analysis work and how we're anticipating positioning those different levels of information and how we are progressing with some of the suggestions that you've raised. So in other words, specifically what we're anticipating at that point that the outputs are going to look like. And then we're still expecting to publish the final deliverables in Q1 of next year. So if we can move ahead. One last chance, any questions or comments on the plan at this point?
Okay.
And
any questions on the timeline proposed by the working group? I don't see any myself.
I don't either, Mr. Chairman.
Okay, Laura?
So if we can move forward then, just to close it off, thank you so much for those of you who have sent in feedback, who have contributed feedback during the discussion today. And yes, please do. If you do have specific feedback, some specific points on any of those detailed wording, especially if you can send those along to Sylvia, we will be compiling those, and then we'll be able to reach out to you. If there's something that perhaps we're not quite understanding what it is that you're suggesting, then we can make sure that we touch base with you and make sure that we understand what it is in terms of concerns or suggestions or comments that you're raising.
Thank you. Thank you, Laura. I think that from the discussion, you have received a number of helpful comments in trying to marry the detail and the high-level presentation. And of course, it's always on my mind, and I think it should be on all our minds, that this is a benchmarking exercise that may later be repeated with other jurisdictions. And we're sort of discovering, we're in a process of discovery, I should say, of the well-balanced model that we should use in these exercises. Thank you for a very good presentation. Before I close, I would like to ask our PIOB observer, Robert, to see if you have any comments, Robert, any remarks?
Yes, thank you, Chair. Just a brief comment, if I may. Certainly appreciated the depth of the discussion and the different perspectives that the board members have expressed about at the outset about the purpose of the document, the purposes of the document and its utility for the various intended audiences. That's very positive discussion and very much reinforced the value of the project in public interest terms. I had wanted to endorse and will endorse the Deputy Chair's comments about the use of some of that terminology, including the word stricter, which may be open, it seems, to some misinterpretation or misunderstanding. And just very much appreciated the ensuing discussion about the need to consider the contrasting conceptual frameworks when making the comparison. I think Richard's explanation of how the term should be, that terms like that should be understood in relation to the objectives of the two documents being compared was very helpful. And the reassurance from Laura that there will be care in finalising the report, just to ensure that there aren't any unintended consequences or mistaken understandings about what's being said is very positive. And that goes back to ensuring that the revised objective of the project, which at the previous meeting was endorsed, continues to be met, and that there isn't any intention to draw conclusions on particular aspects, which I think is the key risk that was identified. So thank you very much for that. We'll certainly look forward to hearing the comments of the CAG and indeed the National Standard Setters if it's to be discussed at their meeting, and also to seeing some progress on the other topics that are under consideration. Thank you, Chair, for the opportunity just to make these brief remarks.
Thank you, Robert, for your remarks. And I am going to close the session. Before I do that, thanks to the working group for the very hard work that you've been doing and that you're willing to continue doing, from what I understood. And to staff also, Sylvia, thank you very much for your efforts. And Richard, I'm always very happy to see you and hear you. So thank you. Thank you all. I'm going to close the meeting. Tomorrow we're meeting at 5 p.m. at 17 hours Eastern time, and starting out on the very promising topic of sustainable assurance with the presentation and an EIOC discussion. And we'll also be doing later the technology NAM and fact-finding from the technology working group. So we have quite an exciting and rich day for tomorrow. In the meantime, please have a good day, afternoon or night, as it were. Get a good rest. See you tomorrow. Thank you all very much. Best
Thank
wishes.
you. Thank you.
Bye-bye.
Bye.
Bye.
Thanks.
Thank you.